Hello, I'm talking about the REITs sector and particularly UK REITs, but how their rating is really quite out of kilter with some other international sectors in REITs. So the UK REIT stocks are down in terms of market cap as a whole by 45% since before the crash. It never really feels like a long-term sector, and it's living up to that. They're really out of favour. But the US is quite an intriguing difference in that, for example, if you look at an exchange-traded fund, RWR, that's about 2 billion market cap, and the yield there is 2.6%. The share price is back up to where it was before the Lehman's crash, and that's fairly symptomatic of REITs overall in the States, where the market cap is 40% higher than it was pre-Lehman's. So, what's going on? What's going on, I think, is that the UK REITs are too small. They're becoming a bit irrelevant, and now they're only about 5% of global REITs as a whole. Looking at the UK specifically, 30% are owned by UK institutions, and only half of those are trackers. 18% and rising by US investors. So the point we're making is, you should look at what the US guys are going to be buying in the UK, and you've got to look at that stock by stock. And one of the key issues, I think, is simplicity. So if you look at the biggest UK quoted stocks, something like Hardman, that's refocused and it's de-geared. It's been the best performer. It's up about 30% year to date. And I think that that is largely due to simplicity and the fact that the international investors can get their arms around the straightforward message. But the other sector that is very simple to understand, we think, and has got no real US interest at all, is the UK medical property stocks. They have got about 20-year yields, leases. The rents are upwards only. They've got long-term financing. They're able to grow quite significantly by raising fresh money, either retail bonds with PHP or raising new equity for the other stocks. So that's an interesting one, and it's also interesting because it's growing, and I just said earlier that the UK REITs market is just too small. UK medical property is way too small at the moment for the international investors, but it's almost doubling in size in the current year. I think it's a bit of a spurt this year, but that's going to get attention. Another stock we've mentioned in the past that we liked was Quintain. The reason we were triggered there to get really excited, and we actually posted on YouTube on Quintain immediately after the 18th of June transaction. And what happened there, that was an international transaction, so we thought that might be a key feature looking at the internationalisation of UK REIT ownership. You had a very, very big Hong Kong investor that effectively got Quintain out of a lot of their problems in terms of financing these very large two sites that they've got, Greenwich and later on Wembley. So we posted on that on the 18th of June. They were 38p at the time. They're now 53, which I think probably is high enough. But the symptomatic point is, let's look at what international investors are going to be interested in the UK REIT sector. And we can see why Hardman has done well, and we think that the UK medical property stocks will do well in the future when they get big enough.